after last week's drop in gold and silver prices, we are seeing a recovery here today. Will it continue through the week? We'll find out and discuss a very bold prediction by a major bank on silver. Let's talk about it as we explore. Markets indeed are moving today at a pretty noticeable pace here, not fully recovering the losses that we saw over the last couple of days in trading last week. However, the prices are up. Here's where the markets sit moments before they close. Gold is up over 1.25% now, up $35.30 to $2,893.40. We're getting very close again to $2,900 gold. Silver is up 56 cents. That's a 1.8% increase. Still below 32, but it is sitting at $31.77 right now. A pretty good clip. In fact, the other metals have all moved up, including rhodium today, over 1%, save for rhodium, which is just over half a percentage point increase. So this is something that is not unexpected after the events that we saw over the weekend. In fact, on Friday was that big meeting that was blown up between Zelensky, Vance, and Trump. And we also have the tariffs that are going to be coming tomorrow. So before we get into what's going on there, I want to remind you of the channel sponsor, Summit Metals. I want to thank them for sponsoring this channel and providing really good competitive prices and great service. So check out summitmetals.com. There's an article here I'm going to be referencing that ties some of this stuff together from FX Street. Gold prices is rallying, snapping 2 days of losses as the greenback gets battered due to safe haven demand and falling treasury bond yields. And this is all based off of the geopolitical tensions and tariff threats that U.S. President Donald Trump increased demand for the safety appeal of bullion. And indeed, that is the case, and we are looking at it now. The dollar index is down. It's down to 106.54. That's almost a 0.75% drop for the dollar index. And the dollar index is still very, very high, but that's a pretty big drop for one day to see the dollar fall that much. And that is because of everything else that I'm talking about here. And the Dow Jones is also down over 1.4%, and the Nasdaq is down over 2.6% right now. So that's what we're looking at. Risk appetite deteriorated following the clash between President Donald Trump and Volodymyr Zelensky that we saw last Friday, and tariffs imposed on Mexico, Canada, and China are expected to kick in tomorrow. And data-wise, business activity in the manufacturing sector in February was mixed, with S&P Global improving while ISM dipped but continued to expand. Now, Treasury Secretary Bessent, I heard an interview with him, and he mentions that a lot of interest rates are going down, including mortgage interest rates. So that's good, all running, in a sense, independent of what the Federal Reserve is doing. Federal Reserve are going to leave rates unchanged when they meet later this month. And the latest round of U.S. economic data pushed the Atlanta GDP forecast model further deep into negative territory, from negative 1.6 on February 28th to negative 2.8 as of writing. So the GDP, that is something. The Atlanta Fed has a GDP estimate. If we see 2 quarters of that, well, that means we are officially in a recession. So I think gold and silver are kind of reacting, to that as well. Traders seeking safety bought bullion, gold and silver, pushing prices on the way towards $2,900 for gold and towards $32 for silver. The U.S. 10-year Treasury note falls 2 basis points down to 4.176%, levels last seen in December of last year. So alongside the data that the St. Louis Fed President Alberto Masalem said that the economic outlook is for continued solid economic growth, but recent data pose some downside risk, that's for sure. So the U.S. real yields, as measured by the yield in the 10-year Treasury inflation-protected securities, otherwise known as TIPS, tumble almost 3 basis points to 1.8%. The ISM manufacturing PMI for February held steady at 50.3, slightly down from 50.9 and below the 50.5 forecast, indicating a mild slowdown in business activity. S&P Global Financial Manufacturing global manufacturing showed improvement. This is the PMI rising to 52.7% from 51.2. Money markets had priced in that the Federal Reserve would ease policy by 71 basis points, up from 58 last week, revealing data from the prime market terminal. So all of those factors are going to weigh in on what's happening here. Now, there is a technical outlook for gold prices as they advance back towards the $2,900 level. Gold price uptrend resumed after 2 days of losses that drove it below $2,900. But buyers stepped in near the 28.30 mark, lifting spot prices above 28.50, which now it's, again, a couple of dollars shy of $2,900 right now. And that exacerbated the rally towards 28.93. It's at 28.95 right now. Just ticked up. So if buyers achieve a daily close above $2,900, bullion could be posed to challenge the year-to-date peak, which is at 29.54. Yes, that's the new number to get past in order to move to $3,000 gold, which many feel we're going to get there. In fact, UBS thinks we're going to get to $3,200 gold. But silver, this is where it gets really interesting. UBS forecasts silver to reach $38 an ounce in the next year. That's 12 months from right now. UBS forecasts silver to hit $38 per ounce within 12 months as the bank anticipates a consolidation in the ongoing gold rally and modest recovery in global industrial production, it said in a note just today. Now, think about that for a moment. If we're seeing the recessionary indicators such as negative GDP growth, at least according to the Atlanta Fed, well, that really should not bode well for this shiny metal that you see before you here. No, and technically, it should mean that silver prices should fall. But they're saying that it's going to track alongside with gold. So that could push silver prices up as people, in a sense, see what's going on with the dollar, with the economy, and look for a safe haven appeal in gold. And silver will benefit more from it than the lack of demand in the industrial sector. That is a possibility, folks, something we should think about as we track these prices. In other words, I'm keeping an open mind to silver performing well, even though there is indeed recessionary hints of recession coming in the coming months. We'll see here how that plays out. Of course, other things that will have an effect and impact is government spending and increasing deficit and debt. If we can stabilize and strengthen the dollar and start to see other factors and get through a minor recession on the other side unscathed, well, that could bode well for the economy, and maybe gold and silver very well could normalize and stabilize as well too. You know, as a buyer, I like to see low prices, obviously. I have no problem buying when people are not loving gold and silver. No question about that, because and it doesn't impact my view because I understand gold and silver history, and that it far outlasts the sentiment by the market or by individuals in this community or anywhere else. Gold and silver have historic value that is unmatched by any other asset out there on the planet, other than maybe copper, which is tied to bronze, but even that is really relegated or delegated to essentially what has been the case for thousands of years. Copper is money, but you know what? Gold and silver are active or are dormant money, and they have a much more rare, much more in demand, and seen in a much grander scale than copper, which is very, very common. But nonetheless, we should look at all three metals, I believe, to some extent in terms of how they have performed throughout history. But gold and silver provide just a bit more of a punch, well, a whole heck of a lot more of a punch than copper does. So there you have it. Now, $38 forecast in the next 12 months from UBS, this big bank. What do you think? I don't know. I think it is possible. I'm still holding on to my prediction of $36 an ounce that we'll see before the end of the year. But I tell you what, as we are now into March, and it's still barely able to hang on to $31.50, it may be a tough road ahead for silver. But if anything, it will carry along with gold. Right now, it has outperformed gold slightly, so we'll see how that plays out. Outperforming it slightly and narrowing that ratio. If that's something trend line that can continue, well, we'll see. But remember, it wasn't terribly long ago this year when it was flirting with $33 an ounce for silver. So we could get there again and push in $3 more after that is $36. And so it is quite possible. We shall see. Let me know what your thoughts are down in the comment section below. Hope you found this video informative, insightful, and educational. We'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.